Well, Rob, we had a fairly positive start this morning. We had some reassuring comments out of Fed Chairman Ben Bernanke last night, and that gave a little bit of life to the Asian markets. Our markets opening higher. We've since dipped into the red, come off our low points, but still down by about 1/3%. What's driving this sentiment, Rob?
Yes, well, I think the Australian market was relatively strong, and the miners, BHP Billiton and Rio Tinto, were up quite strongly, pushing those markets up on new pricing for iron ore. So I think when the market initially opened, the resources opened relatively strong, but a little bit of profit taking coming into the market straight away. People are still very worried about where this market is. There's so much uncertainty in Europe with sovereign debt, and even though Ben Bernanke and the Hungarians themselves are also trying to ease the panic, people are very, very sceptical whether we're going to get out of this recession as quickly as we had thought. So every time there's a bounce in the market currently, people are selling into any of that strength.
Well, Rob, we've now retraced more than 300 points from the highs we hit back there in April. I mean, do you think there's further downside on this market?
Very possible that there's downside. We're on very critical levels on a technical level across markets across the world. We started to break all of those support lines. So there is risk to the downside, at least another 5 to 7%. But it's a very difficult time in the market now, and it's buying and selling is very aggressive on certain days, and then it lulls out, and then there's nothing. So you have to wait for the market to break down before you start to buy.
Well, just given the extent of the pullback we've already seen, do you think we could get some buyers in at the bottom levels starting to nibble for bargains there?
I think people that have held off will be looking to get some value in some of the stocks. We see some of the big miners that are down nearly 30% from the highs earlier in the year. So I think there will be some people coming in for value, but I don't think they'll be too aggressive in their buying. So I think that there will be looking to buy at these levels. But I think probably 5 to 7%. Yes, there should be some of the long-term equity, long-only equity funds that will come in to pick up some stock a few percent lower than this.
Of course, the gold price in the meantime has just crossed over into a new all-time high in dollar terms, also in euro and sterling terms. We've got it trading at $1,249.47, so just slightly higher than the previous high that it did hit. And that really just illustrates some of the risk aversion we're seeing in the market, doesn't it?
Yes, definitely. As soon as panic comes in from the sovereign debt, they come in for gold. And gold is seen as a hedge and as a store of value. So people definitely buying gold. The gold ETFs are also at very high levels in the amount of gold that they're holding. So very, very good for South Africa in a whole, and good for our miners, which have generally lack a lot of the other gold miners around the world. But they're all looking relatively firm and looking the only sector that's looking like they're still in a bull trend.
Of course, a couple of key things coming out this week. We've got some economic data coming out of China, and I'm sure the market's going to be looking at that rather keenly following the slightly disappointing PMI number we got last Monday. We also have the BOE and the ECB meeting on interest rates, and I'm sure the market will be looking to ECB President Jean-Claude Trichet to find out if he has anything to say about the sovereign debt. Is this something that you're going to be looking for in the markets, Rob?
Yes, well, on the interest rate side, obviously, I don't think there'll be any move in interest rates onto the upside in Europe or in Britain, so those will stay where they are. We'd like to see some type of confirmation for the European Union on how they're going to deal with the sovereign debts, and do they really have enough money, and some strong wording to say, what are they going to do to settle the problems of contagion. So they'll be looking closely at that meeting. On the Chinese side, yes, looking very closely at that. They seem to be able to step away from the market when they want and allow all the prices to collapse, and then they come back into the market at any given time. So it'll be interesting to see if they've still got that firepower that they've had over the last year and a half, or if they really are starting to have pressure on their own economy. So we're waiting definitely for those numbers.
Of course, Rob, not much news on the corporate front in South Africa. We have one story, and it's really an ongoing rumour of a foreign bank looking at a South African bank. We had that recent speculation about Standard Chartered and Nedbank. Now we have stories in the paper that HSBC's big boss has been in South Africa and has been holding talks with Capitec. Of course, that's the smaller bank at the lower end of the market. Capitec, though, has denied that it is looking at selling its business.
Yes, it definitely looks like the foreign banks are looking into South Africa. Obviously, there is some difficulty in how they purchase a South African bank with political issues. But obviously, you take a look at all of the tax implications that's going to be happening, possibly on the European front for banks, as well in the States. And maybe they're thinking if they can broaden out into a growth market, an emerging market, they can move away from high taxes and high regulation. So it is something that they're probably looking at, but probably from a distance. And as you say, the Standard Chartered, Nedbank. People say that there's nothing happening there, and the same with Capitec. So obviously looking at us, and maybe it's a way to get around some regulations that will be happening in Europe and the States.
Of course, we have a couple of listings this week. We have ReCM, and that's listing today. Then we have Life Healthcare, which has pushed its listing back to Thursday. Of course, the listing price, R13.50, so not raising quite as much as it hoped to in this market.
Yes, I think they're looking more at about R17.50, and they came in at about R13.50, so a little bit lower. They also didn't get as much money from overseas. I think they raised about 600 million. People probably looking for $800 million there. So they didn't get as much as they wanted. Obviously, it's very locally based, and didn't get as much funds from overseas as they thought they would. But still a relatively good listing if you take into account the difficulty of the market that we're in and problems with raising capital. So not too bad. It gives the fund managers another alternative from Medicare and Netcare. Mediclinic and Netcare, so it's another alternative, and there will be some funds that will push some of their exposure from Mediclinic and Netcare into life. So at least it gives the fund managers somewhere else to look.